All right, so Patrick asked, "Hi Spicy, I have a question around momentum long trades. When there's a staircase with pullbacks into support, do you prefer to buy after the pullback when the support holds or at the break of resistance? Assuming that both are in sync, are resting limit orders providing more fuel at a fresh resistance level? Curious about your take on this. Thanks, Patrick." Okay, so I hate to answer questions with the answer, "It depends." But unfortunately, the answer to this question is it depends. And it depends on, so you said here, assuming that both are in sync. Okay, so here's how I measure sync. So I've got the frequency. So how many opportunities did I get to take a trade with this strategy since the regime started? So how frequently am I actually getting trades? The next one is win rate. The win rate percentage. Of those opportunities, how many of them are actually going to target? And then the final one is average drawdown. So of the winning trades that went to target, how much margin of error did I have on them? So from the entry, did it just fly straight to the target without going even a single tick against me? Or did I get into the trade? It like kind of dilly-daddled around the entry. It like almost hit my stop loss, then turn around and then hit the target, right? So most of the time, for most of these staircases, what I found is that it's either the momentum trades are gonna be a lot more in sync, or it's gonna be the mean reversion longs are gonna be a lot more in sync. So okay, example. Imagine we have Momo longs here and we have mean reversion longs here, and we're trying to compare which one is more in sync, right? Imagine we have 30 opportunities for momentum longs, and let's say there's like 70% win rate and average drawdown is like 10%. And then mean reversion longs, we have like 4 opportunities, win rate is 100, and let's say drawdown is like 5, right? So this one, momentum longs, they would be printing us more money than these. So these ones have a lot higher margin of error than these ones. So I would be a lot more focused on this, and I wouldn't be as gung ho with trading these. So like I would be a little bit more cautious with trading these ones. I would be really aggressive with how I trade these ones. Alternatively, it could be the opposite of this, or something that looks something like I'll give you another variation of this. Let's say we have 10 momentum longs, 10 mean reversion longs. Let's say win rate of these is like 60. Win rate of these is like 90. Average drawdown. I see this a lot when both are in sync. Boy, I'm really struggling with this eraser. Okay, I found that when you're looking at staircases when both are in sync, what's likely to happen is that the average drawdown on the momentum trades is actually quite high, because think about it. Prices, in order for you to even get a mean reversion long, price has to pull back into the support, right? So we have to have something like, and then that's the support. Price has to actually pull back into it before you can trade higher. The fact, okay, so when price is not even pulling back into support, I will look a lot more towards the momentum. When it is pulling back into the support, I will prefer to trade more towards mean reversion, because when you compare the two, this is specific for like when you have an equal number, when the frequency for both is roughly the same. This is what I found. Let's say frequency and win rate for both is roughly the same. Let's say we have something like this, 10 momentum longs, 10 mean reversion longs. I have found that when measuring the sync, it will look something like this. So equal number of opportunities, the success rate on them is roughly the same, but the average drawdown is going to be higher for the momentum trades. Therefore, the mean reversion long trades are going to be a little bit easier. And the reason why the momentum long drawdowns are going to be higher is because the fact that it's pulling back into support means that after price hits a resistance, it's still kind of trickling down a bit before it wants to rip higher. So I'll have a little bit of a preference towards the mean reversion. But yeah, so I'm gonna do the best I can to answer it, because this part, so this second part of this question, are resting limit orders providing more fuel at a fresh resistance level? I can't answer that because I just simply don't know. Like, objectively, I don't know the answer to this question. But what I can say is that if we have something like this, I will look for mean reversion longs. If we have something like this, where price is not even or barely pulling back to the support, I'm going to be looking for momentum longs. So yeah, when measuring the sync, even if both are in sync and both are actually making money, measure the sync with these three things: frequency, win rate, and average drawdown, and then look at which one actually is easier to trade and have gives you a higher margin of error, and then just stick to that one. That one is going to be the one where you can really go gung-ho and really aggressive with those types of trades. And the other one, just be a little bit more cautious. But it's for sure, like, it's possible to trade both in the same regime, assuming that the quality of the trade once you get it at the entry is actually high enough.